Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down. Looks like we did see some tankage on the last few hours. S&P is down about 1.5%, NASDAQ a little more. All across the board, pretty much around 1 or 1.5%. It's nothing too heavy, but I think it caught a lot of people off guard because everything seems to be pretty mellow, right, throughout the day. And then out of nowhere, it looks like we tagged 342. I want to make sure though, because I was actually out of the office half of the day, so I want to make sure we did that. I'm actually looking at S&P 500 index now, the cash market. So it looks like we did tag that 343 area on the spider there. So 342, I mean 342 there. So if you actually go back and watch the last night's video, or you already watched it, you remember we talked about this, right? I didn't say we're gonna see a big tankage in the last 2 hours of today's trading session, but what I talked about is this: even if we see a market pulling back, right, after tagging 343, and this is what buyers wanted to do, go up here and tag it. By doing so, what is happening in the market? Well, it's going to neutralize a downtrend, and we're going to get into more neutral ground, right? So we were in a downtrend, correct? Lower high, the midterm sense, the intermediate term I'm talking about. We got lower high, lower lows. But this high right here, this is a very important high here. I'll put two square, there. We got two squares there, right? Because it's important. Because we got the high there back in 360 early September. We got the lower high, lower low, and lower low. But this high is now equal to this high, correct? So now we're no longer in a downtrend in the intermediate term. We're now in a what? A basing out pattern. Potentially a consolidation. Potentially a continuation, digestion, resting pattern. That's how you want to look at this market as of now, as of today, as of this moment with the data that is at hand, right? So we have buyers done a great job tagging 342 today, cultivating that equal highs. We did see a pretty violent sell-off, and I mean 1.4%, it's, when bears come, they're gonna come much more severe than how buyers come. When it's like 1.5% up day or 2% up day, that's a pretty big up day because, well, that buyers, you know how the bulls move, they kind of move inch by inch, right? But bears, they like to move very rapid, just bring it down hard type of movement. So 1.5% down move, yeah, it's a normal down day. It's a normal down day. I think, if anybody's just freaking out at this point, it's because you're very, very short term, or you just everything seemed normal, and then out of nowhere, right? But again, 1.5% normal down day. That's how bear. You can see a lot of these down days. These are 1.5, 2%, 2.5. These are normal down days. It's just that when the buyers go, it takes its time. You got to understand characteristics of a buyer's move and the bear's move. But anyway, so we tagged that. We are now in a neutral ground, no longer in a downtrend. And we pull back pretty fast. We filled which gap? This gap right here. This is why gaps are good, because when the gap gets filled, what does it do? It's going to act as instant support. So now what I'm going to do is I'm going to get rid of the gap. But we understand that that gap just got filled. I'm gonna bring this support down here because that's a next gap area. So we got, actually buyers got two lives. There's one gap here, there was a second gap here, right? That second gap was filled. So the one life is gone. So we still have a second life here, and I'm kind of looking at it like a video game now, right? You got 2 lives, we got the first life died, and now you got another chance for the buyers to use it as a support, 334, and bring it potentially back up, or some kind of consolidating, or some like they're slowed down a little bit here, kind of let the selling slow down before trying to get back up 342, right? We have my midterm and the long-term moving average is all in that vicinity here. You can see that that's a pretty strong pivot right there. That's a prior resistance, prior support, prior support. That's coinciding with the gap fill area from today. So likely there might be some kind of bounce tomorrow unless we see a gap down. So when you see a strong support, and that's what I like to call jumping over the fence. Bears don't want to deal with this fence. Bears know that this is a pretty strong fence, right? Because the gap just got filled. That's a support. We got these moving averages hanging around here in that vicinity at 334. That's a support. That's a double support. So only way bears can really get it down is maybe gapping it down, jumping over that fence and trying to fill this gap, right? So here, I'll bring down. So these are the support area for tomorrow. Obviously, buyers want to find some support in that vicinity. We got the short-term moving average right above it. So if we do see a bounce tomorrow, right, that short-term moving average could act as resistance. We may see a fallback lower. But anyhow, what buyers want to do is defend 334, 331, 328. If we can defend, if the buyers can defend and protect this level, right? Then I think there's a good chance if we can defend, the buyers can defend this level. There's either we bounce from here, bounce early, bounce in an ideal level, or bounce late. Then we can get back up to 342. If we lose all these levels and this thing start breaching below 328, things are going to be hectic for the buyers, but let's not go there yet. So whenever you do your analysis, do your analysis based on what you see as of today, as of this moment. Things can change tomorrow. We'll come back for it, but definitely this is a pretty strong support level, right? Bears are dealing with the support level here, and I think best bet for the bears is gapping it down. If we don't see any kind of a sharp gap down tomorrow, there's good chance buyers are trying to bring it up, at least retest 337 tomorrow. Let's check out that oscillator. So oscillator is curling down, and that's the ideal level. That is an overbought zone, right? So that's a good sign that it was able to push all the way to overbought zone, not like this one right here where it kind of prematurely curl back down, and that's a weakness. But we kind of have a strength at this point. Buyers got some momentum going here with that higher lows on the oscillator, right? And we're now pulling back. So next perceived support is that area right here. So if we see market bouncing tomorrow, we probably going to see this oscillator continue to curl down, right? We might see some kind of discrepancies from the price action. If the price gets up and sees some momentum to the upside, we're gonna see the oscillator continue to come lower, right? And then if the market is kind of hanging up and holding up all day throughout the day, let's say all day throughout the day tomorrow, it's holding up, like something like this here, just getting up or floating up. There's a good chance on today's what? Today's Tuesday? What day is today? I don't even, Tuesday. Today's Tuesday. So if Wednesday we see a move, and then if Thursday we see, either some kind of consolidation or something like that, then you could find support right here, and buyers might trying to go after another push higher to back to the, that overbought zone there. Keep in mind, when the oscillator gets elevated, bulls are trying to find that momentum. Bulls are trying to find the momentum, right? And we are currently elevated. So, despite the fact that the price is actually below My short-term moving average, just the overall sentiment as I've analyzed this market with you today, I still want to give it bullish, but not totally bullish because the price is below my short-term moving average. I want to give it neutral to bullish. Not just bullish, but still leaning towards bullish. Neutral to bullish. In the midterm, we have gone up here, right? Retest these highs. We're no longer in the vicinity of lower highs and lower lows. These are equal highs now. In the midterm, we are neutral. We're neutral. For longest time, it was bearish. And then it became neutral to bearish, neutral to bullish, or something like that, or neutral to bearish. So it was bearish throughout these moves. And once the market got up, I've been labeling it neutral to bearish. Remember that? Neutral to bearish. Now neutral. I might have said it neutral yesterday, but now it's neutral. It neutralized downtrend threat in the midterm by cultivating that equal highs here. So let's see if the buyers can protect this level. 334, 331, and 328 this week. If we can do that, there's a good chance buyers can try to get back up here. But if we lose that 328, things could get hectic. Here, let me actually throw a Fibonacci there. One last technical level I'll give you here. And we'll keep the Fibonacci here. So you can see how perfectly Fibonacci level is telling us. It is no accident. It is no coincidence. Even Fibonacci is agreeing with me on 334, 331, 328. That tells us my price action analysis correct, that those levels are very, very important. So let's see how it plays out tomorrow. I'll tweet things out, how the market's playing out. Market just filled that gap. We're just right on that midterm, long-term moving average support. We'll go from there. You guys enjoy your evening and good luck trading tomorrow.